So I was at a real estate investing seminar not long ago, and they called up a self-directed IRA custodian representative to speak to the group. And he was so arrogant and so holier than thou that it just made my skin crawl. Now, I know most professionals are not like that, but this individual was perpetuating a lot of myths that a lot of self-directed IRA custodians continually put out there. So I want to break that down today and expose it for what it is. So the first myth that I'll address is they'll tell you, hey, we're going to stop you from blowing up your account with prohibited transactions. That's what SDIRAs will tell you. Now, so what's a prohibited transaction? One example would be, all right, so you buy a piece of real estate with your IRA or 401k and you rent it out to yourself. Basically, you're occupying that residence and you're not paying any rent, but yet it's going to be tax-free when you sell it. Nope, can't do that. There's a whole host of things you can't do, but essentially it involves self-dealing. Any transaction needs to be at arm's length within your retirement plan. Okay, so here's a list of, this is directly from Title 26, Section 4975, that deals with qualified pension, prohibited transactions, and defines disqualified persons. But basically, you can't sell a piece of property to yourself. So let's say you bought a piece of property in your own name for $100,000. You can't sell it to your IRA or 401k for $50,000 and take a $50,000 loss. Cannot do. You can't lend money to your IRA to yourself from your IRA, although you can from your 401k up to $50,000. And another example would be, let's say you bought a rental property within your IRA or 401k and you were charging it management fees. You can't do that either. You can't collect present money from a rental. So those are some simple ones. Basically, if you're spending time trying to figure out how to game the system, that is a prohibited transaction. And the penalties are stiff. So if it were to happen and if you were to get caught, you would basically, you're triggering the total value of whatever property is involved as a taxable event, which is not going to be a pretty thing. But you can avoid all of this by simply Googling how to avoid prohibited transactions. And it's pretty simple. If you have common sense, you can tell what is and what isn't. And just don't deal to yourself. That's really what it comes down to. And you don't need a self-directed IRA custodian to tell you what's approved and what's not if you're familiar with these rules. And it takes about 15 or 20 minutes to get familiar, okay? Moving on. The blanket statement. The self-directed custodians will tell you, we'll keep you compliant. Most of the time, they don't even explain what that means. But it's a little bit of a scare tactic. You don't really need them to stay compliant. If you're familiar with those prohibited transactions, you're going to stay compliant. So there's no problem there. Number 3, hey, you need us for reporting. That's what self-directed IRA custodians will tell you. You don't really need them to help you report. If you can record things in Excel as to where your assets are, the address of any real estate you hold, that's really all you need, is to be able to keep your own records in a simple format and be able to tell when you bought something, your cost basis, when you sold something, and what you sold it for. That's really all you need to do when it comes to retirement plan reporting. Okay, so you really don't need a self-directed IRA custodian to do that. And the last one, which I find the most humorous, but they will definitely tell you, is that, hey, we're going to prevent you from getting audited by the IRS, which is funny to me because I've handled numerous audits by the IRS for clients. I actually handled all of the audits for one office that did well over 10,000 tax returns in a year. And I did this for several years. And I saw what triggered audits from the IRS. And I never in my time there did I ever see any retirement plan being audited. Now, that's not to say that it can't happen. It certainly could. But if you were to steer clear of prohibited transactions, you stay away from collectibles with your retirement plan, you basically have no chance of getting audited by the IRS, okay? So these are the myths. Don't be fooled. You don't really need a self-directed IRA custodian. That's really, these are reasons why that they'll throw at you to justify their existence. But essentially, once you're free of all of these, you're free to open up your own solo 401k and not pay their fees. That's really what it comes down to. They want you to pay their fees, and they're trying to scare you into it. So don't be fooled. If you want to go for the self-directed IRA, hey, have at it. But if you want to try a different way with more flexibility and less fees, take a look at the solo 401k.